Can you retire before age 55 simply by contributing to your 401k only up to the company match and then saving to a brokerage account? Today on Your Money, Your Wealth podcast number 432, Joe and Big Al spitball on using this so-called tax jailbreak strategy to retire early. Plus, is Christine on track to have $150,000 present value to live on in retirement? Is John stuck just watching his money grow and turn into big old required minimum distributions? Can Jackie contribute to a SEP IRA and then convert it all to Roth? And what do the fellas think of Lee's I-Bond emergency fund? I'm producer Andy Last, and here are the hosts of Your Money, Your Wealth, Joe Anderson, CFP, and Big Al Clopine, CPA.
An advisor published this early retirement guide. It is short, curious. Is this nonsense or sensible? Thank you. Longtime listener of the show, William.
Okay, that's it. Andy, why don't you give us highlights of the article?
I think Andy sent it to me.
Okay. Oh, you saw it?
Well, I was going to say, it's just basically his two things are stop overfunding your 401k and to open a brokerage account.
Okay. Those are the points. Okay.
Well, if you want to retire early, is that the premise behind it?
Yep. Yeah, it's called How to Retire Earlier Than 55.
It's save a ton of money. Right?
Yeah. But the premise is right. I mean, you can't access your retirement accounts till 72T, but let's not talk. Let's not make this too complicated. Let's just say if you want to retire before age 59 and a half, or if you have a 401k before age 55 without penalty, then you should have money outside of retirement plan.
Correct. But the problem is, if you're going to retire at 50, you need to understand how much money that you need to have, in that you're going to have to save a lot more than you probably think. And the easiest way to save money is in a 401k.
Sure.
You open up a brokerage account and you start saving into the brokerage account.
You don't even miss it because it comes out of your paycheck.
Right. 401k is easy. Brokerage account investing is a little bit more challenging.
Yeah.
Because it's accessible, right? You're like, oh, well, you know what? Maybe we want to buy a new car. Maybe we want to do this. And, oh, well, maybe we can touch a little bit of the brokerage account.
Sure.
No one ever touches their 401k account. No one. A lot of people do. But if they're diligent savers, sure, most of them that would be their last resort.
Yeah, you got to have discipline. So here, a couple ideas, though, is if you're employed, then you can have some of your money come into your checking account and some go into a separate savings account. So that could be automatic outside of retirement. Or if it all comes to your checking account, you can have an auto withdrawal each month or each paycheck, right, for a certain dollar amount. So it goes to a savings account. So that can be done to automate it. But I think the point's well taken is if you don't automate this thing, you're probably not going to get to where you need to be.
Right. But yeah, sure. Here's my savings. Is that all right? You go to the 401k to the match.
Okay.
And then from there, you go to Roth IRA. Right. And if you still have money, you go back to the 401k, you max it out. And then if you have still money left over, then you go to the brokerage account. Okay.
Now, what if you have a Roth 401k option?
Then I'd like Roth 401k.
Yeah, me too. And I think most of them do. So make sure that you get your match 100%, but then also make sure you get some money to a Roth IRA.
Because Roth IRA, you still have access to the money. You have FIFO tax treatment. So
True.
Let's say I want to retire at 50. I have full access to the principal that I put in.
Yeah, as far as contributions.
But that doesn't make a lot of sense either, because you want that Roth to continue to grow.
I know, right?
Right, but I would much rather take the principal out of a Roth IRA than the principal out of a brokerage account.
Right.
Right. Because the principal of your brokerage account is going to be taxed while the Roth IRA is going to continue to grow tax free.
Sure.
So it's just probably, what do they call it? What did it say? Jailbreak?
Yeah, it's called the tax jailbreak strategy, which I think is really interesting since nowhere in this thing does it mention Roth at all.
Jailbreak. It's just like breaking
get out of jail.
Just
get out of jail early.
Is that like your employment?
I think that's exactly right.
I gotta look at that strategy.
Gotta get it. Yeah, you need to get on that.
Getting on the jailbreak for sure. We got Christine writes in from Seattle. Hi there. First of all, Joe, I must commend you on the great work you've been doing, dialing it back.
Wow.
I know what she's talking about.
You used to be a little rougher, huh?
Yes.
Now that's a different commentary than Kevin the accountant.
Kevin. I'm sure many of your fans miss your edge, but I think you evolved my new evolved style.
And because you're
much less intimidating to the masses of people you serve, and I admire your restraint.
Because you're a family man now. So
But was I just a complete ass?
Apparently.
I don't know what's changed, honestly.
You see the same thing, Andy.
This is my release. You know what I mean? It's like,
well, and
we deal with all
point.
sorts of,
and there's probably hundreds of thousands of podcasts out there. If you don't like ours, change. You don't have to listen to it.
So yeah, this is our therapy. You know, we're still trying to help, but if
Yeah.
I can be a little bit more honest with some of these questions,
Yeah, true. I think people like that.
then it's like, okay, well, I can't do that face to face with someone. I've started a new job at 57. By the time you read this, my salary is $150,000, which is equivalent to the $100,000 I was making 20 years ago in my career. Sigh. I now have much higher expenses and the higher cost of everything these days, including a new mortgage from 2020, more than twice what was mine 20 years ago. And at least I have a low 2.875 interest rate. My goal is to have $150,000 present value to live off in retirement. She's very into the future value, present value calculations.
Yes.
She probably has an HP 12C.
Yeah.
She's like,
well, if she does, she could do this calculation herself, but I did it for you. So we'll get there.
My retirement situation is single. Okay. Savings, $1.7 million, 900 non-qualified, 600 IRA, 200 Roth. Congrats. Good for you, Christine. Social Security, $3,500 a month at 67, or $4,500 a month at 70, if my future annual salary equals 150, or $3,200 and $4K if my future salary is zero. Investments, primary S&P and NASDAQ index funds. My dilemmas are, number one, do I need to contribute more than $12,000 annually, 4%, $6,000 personal contribution that will unlock my 4% 6K company match for the next 10 years to make my goal to have an equivalent of $150,000 in today's dollars post-tax when I retire. Okay. So if she contributes 12, she gets 6.
Right.
Should I do another $100K to $125,000 Roth conversion this year, the top of the 25% tax bracket, since my wages will only be $75,000. I typically have $25,000 in deductions. Note, I'd have to sell non-qualified assets at a long-term capital gain rate to pay the tax. Okay. I drink. Okay, good. It's summer, which means Mount Gay and tonic with a lime. So refreshing. Oh, gin and tonic.
Yeah, right.
Mount Gay likers there.
Isn't Mount Gay rum?
Okay, no, it's not gin.
When I Google Mount Gay, I get Mount Gay rum. So
I thought it was gin too.
Rum and tonic?
That's an odd combo.
I don't think someone's drinking rum and tonic. I don't care if you're just stuck on future value and present value calculations all day long. I don't think you're drinking rum and tonic.
It's not possible.
It can't be. Maybe that's why she's got all right. I drive a Tesla Model 3 with 350,000 miles. What with
range?
Oh, range.
Yeah.
When I bought it a couple of years ago, cost less than replacing my Lexus. Oh my, that I bought it. She is all into the.
Yeah, she is. She wants the numbers.
I bought this, but it costs less than what I bought 14 years ago.
Yeah.
I had a sandwich yesterday that cost more than
a
full meal cost 6 months ago.
Yeah, right.
A bottle of Mount Gay today costs more than it did. Looking forward to hearing your spitball, Christine in Seattle.
Okay. So I ran some numbers, Joe.
All right.
And I already see a mistake I made. I ran 12 years instead of 10. I should have looked at this more closely, but I'll give you 12 years out. So present value of 1.7 million, contribute 12,000 a year.
Plus 6.
Yeah. And then 3.6 million at 10%. I'm sorry, 3.6 million. I'm sorry. Let me start over. I compute that you'll be at 3.6 million. 4% of that is for distribution rates, 142,000. Now we add your Social Security of 42,000, you get about 186 in future dollars is what you could expend. And then if I take current spending at 150 at 3% inflation over 12 years, I get 214,000, right? So you're a little bit short. You're pretty close. You're probably about 30,000 away of spending based upon my quick calculation.
I got more than that. I got $1.7 million is what she has. Okay. So
Now I got she's saving 12, which is 6 personal and 6 match.
But 12 annually. Oh, 6 and 6.
Yeah, that's why you got a higher amount.
Oh, I gotcha.
But run 10 years instead of 12, like I did.
Okay, so she's saving $12,000, and then she's got 10 years at 7%. Future value of that is going to be $3.5 million. If
Okay.
he takes 4% out of the 3.5 million, that's $140,000.
Yeah, plus the 42. So you got about what I got. So 100, call it 185,000 of spending in future dollars.
So I think you're right on track.
Yeah, but the 150 at 3% inflation becomes about 205,000 or so.
If my future annual salary is 150, so I think she's already placing that as her future value.
Yeah, but
she makes 100 today.
But I think she wants to live off of 150.
Mm-hmm.
My goal is to have the equivalent of 150 in today's dollars post-tax when I retire.
Got it.
So anyway, so it's pretty darn close. So let's just say you'll have about 180,000 ish of income based upon the 4% distribution rate and Social Security, and you're spending the future spending of $150,000 at 3% inflation rate. Let's call it 205,000 ish. So you're about 25,000 off. But close.
Here's a couple things. Save just a little bit more.
Yep.
Work 6 months more.
Yeah, I
and
know.
spend $200 less a month.
Right.
And you're right there.
Exactly. Yeah, these things don't take a lot of tweaks to make them work.
We use 7%. If you get 7.2%, I'm
Yeah.
sure you make it.
And I use 6. So my 6% over 12 years is about the same as your 7%.
7 over 10.
Over 10. Mm-hmm.
Because she's in what? Index funds, NASDAQ, S&P over
Yep.
10 years. The money's, probably going to double plus her savings.
Yeah, I would agree with that.
So yeah, Christine, you're right on track. You are really close, and you just kind of keep monitoring it. And then if you need to save a little bit more, spend a little bit less.
Yeah.
Push it out maybe a year. All good in the hood.
Yep. Agreed.
All right. Thank you very much for your question.
The conditions that create a recession can really impact your ability to retire when you want to. If you make the wrong financial moves during a recession, it can take decades for your portfolio to recover. Visit the podcast show notes to watch how to build a recession-proof portfolio, the latest episode of the Your Money, Your Wealth TV show, and to download the free companion guide to learn the signs of a recession, market sectors that tend to be the most recession-proof, and tools and strategies to help you ride out recessions when they happen. Click the link in the description of today's episode in your favorite podcast app to go to the show notes, access all these free financial resources, and to ask Joe and Big Al your money questions via email or voice message.
Hey guys, my name is John. I'm a medium-time listener, second-time caller. I'm in Texas. I drive a Nissan Armada, and I drink water during the day, during the week, and on the weekends I like beer, specifically something a little stronger like an IPA. My wife and I are 40 years old. Our combined income last year was about $360,000. In our accounts, we have about $200,000 in taxable brokerage account. We have about $450,000 in tax-deferred traditional IRAs, and we've got another about $150,000 in Roth IRAs. I too am borderline obsessed with Roth conversions, and so the way I see it, any conversion I do will be taxed at the 32% tax bracket, since I'm right at the top of the 24% bracket. So am I just stuck to watch my tax-deferred money grow and then be saddled with a big RMD someday? Because I expect both of our incomes to go up in the future. So anyway, I'd like to hear your thoughts and appreciate it very much, everything you guys do. Have a good day.
All right. Well, thanks, John. Medium time listener. I don't know.
Yeah, that means sometimes
Well,
not a
more than most. Probably.
light listener, but
Yeah.
not a significant one either.
Is he stuck, Al? He's 40. He's young.
Yeah.
He's got 450,000. He's done a really good job saving.
Great saver by age 40 to have all that money. You bet.
Got $1 million. He's at the top of the 24. He's like, hey, do I creep up a little bit? Do I do some conversions, or do I continue to save into the 401k plans and let this thing continue to compound?
Sure.
We need more information, I guess, right? To do any type of analysis.
Yeah. I mean, it depends. If you're going to work for another 25 years and this becomes a giant number, and if your lifestyle is such that you're going to be in a high tax bracket, then that would favor more Roths today.
Right. It depends on. It sounds like he's maxing out the 401k.
Sounds like it. Yeah.
And if he's going to work until 65,
yeah,
that 450,000 could be 4.5 million.
It could, and in that case, you probably do want to do some Roths. I mean, at the very minimum, at least make sure you're adding your new dollars in Roth, or at least a good portion of it. Right. Whether you do Roth conversions or not, we don't have enough information. You should consider it. So the problem is you go from 24% bracket to 32. So that's an 8% increase in tax. So we don't take that lightly.
But he's in Texas. There's no state tax.
There's no state tax, right?
So he's ahead of the game than most.
Than most is right. So I would probably because you're going to be adding a lot, assuming you're going to work for a number of years, you're going to be adding a lot more to this. It's going to grow. I probably would do the current contributions in Roth, and then I would take a closer look whether I want to do Roth conversions or not.
I would second that. Let me just do that. So I just did this.
Okay.
25 years. So he's 40. He's going to work until 65. He's got $450,000 in his 401k right now.
Right.
And if him and his wife continue to max out the plans, and he receives a 7% return over that 25-year time period, he's going to have $5 million.
Yeah, right.
So it's going to be a pretty large nest egg that's all tax deferred. That's going to have to get taxes paid at some point.
Right.
So then it's looking at, well, where does he think taxes are going to go? Do you think tax rates are going to continue to go up? Because he said, hey, my income is going to continue to go up. We're going to continue to save more money. Well, look at it. Well, do you believe tax rates are going to continue to go? Because you're going to have a huge chunk of money that is going to be subject to income tax at some point.
Yeah. So you're really kind of, it depends upon what you're feeling or what tax is going to be in the future. If they're going to be the same or lower, then you might want to give pause to big conversions. On the other hand, if you think they're going up, and maybe you're going to be adding more because you've got a couple $100,000 in tax brokerage account, maybe you're going to be saving more, right? And you got all this other money that's going to cause other income. I don't know what your Social Security and or pensions, what other kind of fixed income you have, or whether there's ever going to be any rental real estate, which will add to your income. So all of these factor into this decision. I will say it's a little tougher. It's a little easier when you're close to retirement, because then those numbers are more real. When you're 40, it's harder to.
Your assumptions will drive everything.
Yeah,
it could make you make really bad decisions.
Yeah, you could. Nevertheless, the younger you are, the more I would like to get more money into Roth.
Yeah, I would switch his contributions. If this was me, I would switch my contributions to Roth, 100%.
Yeah, I agreed.
All right, thanks for the question. Let's go to hello on the air. Could you call me Jackie?
Okay, Jackie.
All right, Jackie.
Sure.
I've listened to your show for 4 years now. Love it. The banter is perfect, in my opinion, and your ideas are so informative. Thank you. I never would have known about all those 5-year clocks without you.
And your life may have been better for that, but whatever.
As for me, I don't drink, I don't drive, I don't have any pets, but I promise I'm still a fun person to be around.
I guarantee she's fun.
Guaranteed. I got a good sense of humor.
Yep.
My question today is about SEP IRAs. I work full-time at a W-2 job with a 401k that I become eligible for in July. I earn about $185,000 a year. I've been ramping up my 1099 side gig and expect to earn anywhere from $6,000 to $10,000 this year. I love to put as much possible into tax advantage accounts and have historically maxed out my 401k and then a backdoor Roth IRA. I plan to continue maxing out those accounts. Is it possible and or sensible to also contribute to a SEP IRA and either convert it all to a Roth IRA or roll it into my 401k if allowed? I assume the pro rata rule wouldn't be relevant because I'm either moving it into my 401k to pay taxes later or converting my SEP IRA to a Roth to pay taxes now, both of which would be fine. I'm 30 years old, and I think it could help me save more for retirement. But I can't find much information on whether or not this is a good idea or even legal. All right, Jackie.
Well, it is legal.
Well, yeah.
Don't worry about that.
But if she's making the only thing I'm a little, so she wants to continue to max out the 401k plan.
Yeah, which I agree with.
And
Yep.
continue to do the backdoor Roth. And then in addition to that, she wants to do the SEP IRA.
Yeah, with her $6,000 to $10,000 of earnings on her side job.
Got it.
And by the way, when you say $6,000 or $10,000 earnings, let's just be clear. This is your net earnings after expenses, not your gross earnings, because that's the number that's important for purposes of this calculation.
So let's explain a SEP though first, because a lot of people might not understand what that is.
Sure. That's a simplified employer pension plan. It's kind of the easiest pension plan that you can set up. It's kind of the first plan that small businesses or side businesses go to. And roughly your net profits, you get to contribute up to 25% of that, up to what, 50, 60,000, something like that. So anyway, so it's, yeah. So let's say, Jackie, you make $10,000 net. Okay. After your expenses, then you could put $2,500 into your SEP IRA. And that's that. And so that sits in the SEP. You might be able to roll that into your 401k. No, there's no tax consequences. If you do a Roth conversion, you got to pay income taxes on that. There are, I forget off the top of my head, but be aware there's like a 2-year rule on SEP IRAs before you touch the money. So you have to check, make sure you don't get into trouble on that one.
Well, the Secure Act also allowed Roth SEPs and simples.
Yeah.
So
could go that route.
Just go that route.
And just not get a tax deduction.
Correct.
Yeah.
Because she wants to convert it anyway.
Good point. Yeah.
Because she's doing the backdoor Roth, so she doesn't want to get stuck with the pro rata rule.
Right.
If she opens up a SEP IRA, that's going to be included in the pro rata rule as she's trying to do the backdoor.
Yeah.
Right?
So SEP, because it has the word IRA in it, it's considered an IRA. Good point, Joe. So it definitely would be included in the pro rata rule if you do it that way. If you do a deductible SEP and then try to convert it.
So look just to do a Roth SEP, and then so you could do the backdoor Roth, or you could just load up the Roth SEP IRA. I don't know when that fully comes into effect. Maybe that's not till next year.
I don't either. I'm thinking maybe it's next year, but yeah, that's
2024?
something to check.
But yeah, you could convert your SEP, but let's say it's $2,500. The penalty on that would be probably a couple percent.
Well, I don't know. Just what I'm going to say is be aware there's some cautions here that you got to look into.
As I look here at the Secure Act 2.0 guide that we published right at the start of this year, I see that the Roth SEP IRA is fully in effect right now. Contact your plan provider for details. Obviously, Joe and Big Al did not have this guide right in front of them when we recorded this, because they're right. Many of the provisions in the Secure Act 2.0 do take effect next year and beyond. And over 100 of those provisions impact our taxes and retirement plans, so it's no wonder the fellas don't have all those dates right off the top of their heads. Watch our Secure Act 2.0 webinar on demand and download the Secure Act 2.0 guide from the podcast show notes to learn more about the major tax and retirement changes that are already in place and coming soon. Click the link in the description of today's episode in your favorite podcast app to go to the show notes and access all the free financial resources right there before the episode transcript.
Hey guys and gal, greetings again from the Sunshine State. As I have gone through my bio before, I will just get straight to the point.
Okay.
Lee from Jacksonville.
Yeah.
In the past, I heard much talk about keeping an emergency fund in cash to ensure liquidity, but I have saved all of our 6 months of expenses into I-bonds and I have already cleared the 1-year wait period. I did this in stages and now have access to all the money, which can be in my checking account within 2 business days if needed. Additionally, I split the total amount of $250 bonds, so need only to cash out some. I don't have to liquidate the entire account. I understand the 3-month interest penalty, and I found there is still a much higher rate of return in the atmosphere of high yield savings accounts. In the atmosphere.
Yeah.
Yeah.
Okay. That's one way to say it.
Is this a good plan? Is having the money in an inflationary protected method good enough to outweigh a 2-day wait period on the cash?
For the $250? What do you think?
Oh God, Lee.
I think we think you're overthinking it just a little bit. Me personally, I would just I would find a savings account that paid 2 or 3% and call it good.
Good. I'm going to stagger my I bonds of $250.
Yeah.
Just in case an emerging. Oh, yeah. Way overthinking it for a couple of bucks here.
Yeah, a couple bucks. Yeah. Yeah, just if this work, I mean, there's nothing wrong with this. It just seems like a lot of work for what little extra return you're going to get. But if this works for you, go for it. But yeah, for most people, just put it in a 0.01% interest rate. It doesn't really matter. It's for your emergency savings. It's short-term funds, short-term money.
Yeah, and just go to the atmosphere of high yield savings accounts
with your $250. Let's see. I want to open a CD, 11-month CD. How much you got? 250. Yeah.
There's an atmosphere of high yielding savings accounts out there.
Right.
Yeah. What is the savings account paying today? Money market account.
Well, money,
3.5, 4?
No, not that. It depends on the bank. At some banks I've seen as high as 3. A CD for a year is paying over 4 right now, 4 or 4.5.
According to bank rate right now, you could be earning about 2.5%
for
a high yield savings account.
Yeah,
2.5%.
That sounds right. So that's
perfect.
Good. It's good enough, right? And the thing is, with a high yield savings account, usually you get daily liquidity, so good enough.
Yeah. Not his strategy. He's got 2 days.
Yeah,
but he needs it.
But then he might
a day earlier. He might get hit with that interest penalty.
Yeah.
I like your strategy, Lee. Keep doing what you're doing.
Nothing wrong with it. It doesn't have to be that complicated.
Yes,
that's all we're saying.
You must just love doing this stuff. He's probably got a spreadsheet.
Wonder how
everything else.
Wonder how many $250 bonds he has.
Oh my God! I would have clients back in the day that would bring in briefcases of these bonds.
Yeah, right.
And I'm like, I want nothing to do with this. You got to look at the serial numbers. They're like, yeah, I kept buying them, and now what do I do with them?
Yeah, right.
That's Lee.
He's got a whole suitcase.
Oh, he's got a suitcase, guaranteed.
Right.
That's it. We're wrapped. Now, Big Al's headed to Fiji.
Yes.
And I'll hold down the fort while you're gone.
Sounds good.
Have a good time, buddy.
See you in a week.
All right. See you next week, folks. Show's called Your Money Well.
We've got one of YMYW's most brutal 1-star reviews ever in the Derails, so stick around. Help new listeners find your money, your wealth by leaving your honest reviews and ratings in Apple Podcasts and any other podcast app that accepts them. Your Money, Your Wealth is presented by Pure Financial Advisors. Click the Get an Assessment button in the podcast show notes at yourmoneyyourwealth.com or call 888-994-6257 to schedule your free financial assessment in person at one of our 7 offices around the country or online at a date and time convenient for you, no matter where you are. Chances are one of the experienced financial professionals on Joe and Big Al's team at Pure will be able to identify strategies to help you create a more successful retirement. Pure Financial Advisors is a registered investment advisor. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the securities or services discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full and informed investment decision.
Got a little 1-star.
Oh, a review, huh?
A real good one.
A 1-star. Okay, that's her.
Love.
Yeah, okay.
Love the 1-stars.
Yeah,
you asked for it, Joe.
Yeah, you did.
Kevin the accountant, he writes in. It's like, this podcast is one of the few that is truly painful to listen through.
Okay.
Perfect. But he listens through it.
But then why don't you just turn it off?
It's like, I just can't stop.
He keeps trying.
I know
there's going to be some
garbage.
There's going to be some learning here if I just keep listening.
God, I'm an accountant and I just can't help myself.
I see things through.
God, he's like, I'm an accountant. I despise change. In a moment of self-reflection, I told myself that I would rid my life of things that provide no value. All right.
Okay, it must be our podcast.
This podcast was the first thing that came to mind.
Yeah, okay.
Al in his toupee, I can stomach.
I have a nice one, don't I?
Oh, that toupee is badass. I don't think you have a nice little head of hair, Big Al.
Yeah, I've never had a toupee, never needed one.
No? Any hair plugs? Anything like that?
No, never. No, it's original. In fact, even in my 60s, I don't even color. It's original color.
Wow. You would color it?
I might.
You're thinking about it?
I-
You're
I-
so mean.
I might, yeah.
Uh,
Well, I do have a TV show.
yeah. Yes, you are.
I got to stay young.
You're the big time. Though he needs to accept hair loss.
I need to accept my hair loss. Well, I don't have hair loss, but anyway, I appreciate you think I have a toupee.
All right. It is Joe. That is truly unbearable.
Oh, it's you. It's not my toupee. It's you.
Yeah. And I agree with you there, Kevin, the accountant. I know. I can barely stand myself. Dude, why are you leaning so hard in your provided picture? I don't know why I'm leaning.
That was just the angle of
The angle of the photographer that took the picture.
and I'm leaning the other way.
Yeah. I remember that photo shoot day.
I do
It
too.
was like the worst day of our life. She's like, get together. Oh, look at each other. Oh, grab a hand. We're like, this
And
is awful.
And we didn't use any of those. They put two individual photos, and we happened to be leaning opposite directions.
And I don't know who put this little collage together.
I don't know.
This is the first time I've seen this.
Yeah.
Joe's truly unbearable. Wow.
And you're leaning.
Yes,
Why?
I'm leaning.
Why were you leaning so hard?
Why does it look like you are chewing marbles in your lower lip?
I'm looking at the picture. I don't see any marbles in there.
Look, I don't know. I got my ass kicked a lot. And
You've got a strong chin. Maybe that's what it
I'm
means.
unbearable. I got it. No. I
Yeah.
have no idea why I have marbles in my mouth. But if you've ever listened to this show, you know I can barely speak.
Well,
And I
maybe
do have marbles in my
maybe second thought. If I look at your left cheek, you might have a couple marbles.
Yeah. You got a big cha in there or something. Yeah, maybe this photo was done on a Monday morning and I might have had a couple of beers over the weekend. I was a little bloated.
Could be.
In your effort to be cool CEO, you come across as a complete beta tool.
Beta tool.
That's
What does that
awesome.
even mean?
I don't know, but that's my new nickname.
It's a
Uh,
beta tool.
I love it. Suggestion: don't cater to Social Security corpses.
Corpses.
Social Security corpses. I don't even know what that means either.
Listeners.
I guess people that are eligible for Social Security, such as myself.
That can't identify a browser outside of Netscape.
You remember Netscape?
Yeah, he's so ornery.
He's a what?
So angry. Why are you so angry? Be a bit more forward thinking. Sorry, I can't get over how creepy Joe looks peeking over Toupee Al in the pod profile pic. Wow, just angry.
I need a new toupee.
I think so. I need to get rid of these marbles.
You should spit them out now.
I wish I could. Terrible. Well, I know I have marbles in my mouth. I've said that myself.
Well,
How
apparently
many-
you look like it too.
Yeah.
How many times in your life have you sucked on marbles?
I sucked on marbles. I don't know.
Maybe when you were 3?
Maybe, yeah, when I was 2.5. But yeah, it's been a while.
Yeah.
But
Okay.
nothing here on Andy. You get left out.
Yeah, apparently. Well, I'm not in that collage of the two of you leaning, so.
It's fine.
No.
I mean, half of it, this is how we look.
Yeah.
That's just like,
All I can figure is that it's based on the fact that you wanted so badly for people to comment on their 1-star reviews, and that's basically all Kevin the accountant had to go on was our profile photos and what you guys look like.
Now, do you
So.
think
just went straight to the jugular with
So
like
he-
marble mouth and your toupee.
so?
And with the listeners too, it's like, God, Kevin.
Yeah, he was ripping on our people.
Kevin, it sounds like you had a bad day. I
It's okay.
actually already forgive you.
Yeah, have a cocktail, bro. It's all good. Try one of those flying trapezes, or what was that flying airplane? Yeah,
I don't
that
know
was
what
a.
you're talking about.
Yeah.
Remember that cocktail? It was called a flying airplane.
Let's. I think go
Oh,
right
paper
to
plane. The paper,
Paper
plane.
plane.
paper plane. That's right.
Yeah.
No, go get a hurricane.
Yeah,
go
get a
a couple.
hurricane. Yeah. Mai Tai.
Yeah.
Just make it a double.
Just load it up.
Just load it up.
Load it up until you start feeling something.
Yeah, we just listen to this podcast over and over again.
Yeah.
All right. Thank you, Kevin. That was fun.